than a traditional IPO often means there's limited financial history available for public scrutiny. For BMGL, this translates to a lack of audited financials, minimal disclosure about past performance, and very little information about the company's long-term strategy. For most investors, these are major red flags, signaling a need for caution. The stock itself is highly volatile. With low trading volume and almost no institutional support, BMGL's share price can swing wildly on even small bits of news or rumors. This kind of volatility can be exciting for day traders, but for long-term investors, it's a recipe for sleepless nights and unpredictable losses. There are still many unanswered questions. What specific products does BMGL distribute? Are they focused on high-margin innovative devices, or are they simply moving generic supplies? Who are their key partners and clients? Without clear answers, it's hard to judge the company's growth prospects or its ability to compete in a crowded market. Another critical factor is management. Is the leadership team credible and experienced in the medical distribution field? Do they have a track record of building successful businesses, or are they newcomers themselves? The answers to these questions can make or break a company's future, especially in a complex, regulated industry like healthcare. BMGL's future growth will depend on its ability to expand its product lines, enter new markets, and build lasting relationships with both suppliers and customers. But the risks are significant. Potential accounting issues, undisclosed liabilities, or simply weak business fundamentals could derail the company's ambitions. Investors need to be aware that what looks like a promising opportunity could quickly turn into a costly mistake. For most investors, the combination of limited information, high volatility, and uncertain management makes BMGL a stock to avoid for now. There are simply too many unknowns and too much risk for the average portfolio. If you're still interested, be prepared to do your own deep research. Dig into every available filing, scrutinize management's background, and understand the risks of investing in a company with so little public track record. Extreme caution is not just advised, it's absolutely essential when considering a speculative play like Basel Medical Group. So, what's the bottom line? CLDI is a high-stakes biotech gamble, huge upside, huge risk. SUGP is a volatile Hong Kong security company more suited for traders than investors. Evoke is a turnaround story, betting on their ability to sell Jamodi before cash runs out. BMGL is the riskiest, a new, opaque medical distributor with little track record. Do your own research, know your risk tolerance, and never invest more than you can afford to lose. If you found this helpful, like, comment, and subscribe for more deep dives. Thanks for watching.